this is an overview of the loan, grant, and the tax relief options for your small business. This is inclusive solely to SBA products, and with the tax relief options having a tie-in with the Treasury Department also. So all of the private sector loan options, public sector loan options are separate to this webinar today. So this is a summary of our current aid relief, and it's current as of just a little bit ago. And since this last few days, we've had a number of new items come up. We've had some insight into how the banks, some of the banks are being able to mobilize to connect to the SBA, and so there's still very much a lot of areas that are in flux as we move on through this process. So today's webinar, we're going to talk about 4 different financial options that you have through this SBA set of programs. And the one that started this off, the first offering out of the Small Business Administration, is really kind of a second product of the SBA, and that is one of the secondary functions of the SBA is to be mobilized and provide relief when disasters strike. And this is one of the very few times that a nationwide disaster has been declared as a result of all the different states asking for that declaration. And so the response has been the EIDL, or Economic Injury Disaster Loan. And this, again, is direct from the SBA, which is a little bit unusual for SBA products. But it provides loans to all the eligible businesses. There is a new, over this last week or so, $10,000 amount advance for qualifying business expenses tied to that loan. And so it's an advance upon the loan. And as applications are put in through directly into the SBA portal, then eligibility for this loan is automatic. You have an option of opting in or not at that point. The newest feature that has come out just in this last week or so, with the signature from the President on the CARES Act, one of the main features is the Paycheck Protection Program. And this is the very popular program right now that is being administered through private banking system, credit unions that are 7A lenders. And the main emphasis areas on this particular loan are employee payroll costs, and including a forgivable element as rules are adhered to over an 8-week option, and as employees are retained or rehired. So for example, in the Oregon restaurant industry, the industry was ordered closed by Governor Brown in advance of having the Paycheck Protection Program in effect. And yet this program retros back to cover those employees that are rehired. The third element is a small business debt relief. That's really kind of a very small part of this, but that's for any of our participating businesses that have existing SBA 7A loans that have gone to your banks. There are relief and relief options for you that are automatic. And the final portion is the employee retention tax credit, and that is a 50% refundable tax credit. And these are for those per employee per quarter, and those are for the businesses that do not use the payroll protection program. So that's a lot of information in a very short slide. Let's see if we can pull that apart a little bit. So the first thing we'll talk about is the Economic Injury Disaster Loan, or the EIDL. EIDL is the acronym floating around right now. So these are for businesses that are for less than 500 employees, making them for small businesses. They're also applicable to sole proprietors or independent contractors, or 1099 contractors, if you will, tribal businesses, co-ops, and employee stock ownership programs with less than 500 employees, and all private nonprofit organizations. And so it has extremely wide range of eligibility uses for this particular program. And so the few caveats that it does need to be federally legal, meaning that even if certain activities are legal through state law and not legal through federal law, this is a federal program, and so federal rules apply. And your business must have been in business prior to the end of January. And so this has come up even today, that the businesses that are applying right now to go into business, are they eligible if they show revenue in previous periods? You needed to, in their case, they needed to have business registrations active prior to 1/31 in order to be eligible. If we could keep our microphones mute, that would be appreciated. Thank you. So the details of this program is that this is a direct loan program from the SBA. It can be based solely on a credit score. 650 was the credit score one time. The government has decreed that basically this is a program that they want to be used, and so they are being very liberal with their terms, as liberal as they can be. Loans less than 200,000 can be without a personal guarantee. Collateral is not needed for loans that are less than 25,000. So collateral can be asked for loans $25,000 or up. And in private conversations that with the SBA, that it may be as high as $500,000 available as a loan without having the property being taken as collateral, without having a secured interest. So you have a 12-month deferral for payments. Your interest rate is fixed at 3.75, and the term is up to 30 years, so it's extremely generous in the payback time. So that's one of the very attractive features of this particular piece. So when you apply and you get through the SBA portal, the borrowers can receive up to $10,000 as forgivable if you spend it on paid leave, maintaining payroll, or on increased costs for normal business activities of supply chain disruption, mortgage or lease payments, very important to have those covered, or repaying obligations that you just can't meet because of revenue loss. And so again, applicants for this particular loan, the EIDL loan, need to apply online. Here's the link, excuse me. Here's a link, and the SBA monitors that from front to end, from application through underwriting and into funding. So a little bit of addition onto this particular presentation is recognition that as the application system changed, the original portal was crashing due to volume and demand by businesses to access it. So the weekend before last, the old portal was taken down, a new one was launched. And there were a number of idle applications that were live at that time that had been accepted. It's recommended that with the new portal that businesses go back in and refile and reapply, because the old idle loans do not have the $10,000 immediate forgivable portion on the front end. And so that's one compelling reason to consider relaunching your application. So follow up with the SBA. The SBA is contacting individual borrowers one-on-one to review loan docs and to get any guarantees that are needed, any other paperwork, ask a few questions regarding business operations. And in the meantime, prior to getting that call, you certainly can contact the SBA. Phone number and web address is right here. So further exclusions for the IDLs, that you can't do anything illegal, illegal activities as defined. For example, cannabis production is not federally legal, so they're not covering it. The principal owner can't be delinquent. 60 days is the definition of delinquency on child support obligations. That the enterprise is not agricultural. Agricultural operations, the large agriculture, has its own set of support structures through the USDA. And so this is not a program that agriculture is eligible for, except for certain specified agribusinesses that are more on the business side and maybe less on the production agriculture side. No, nothing related to the sex industry, gambling industry. There's no lobbying allowed, or if you're in the business of lobbying, or if you are in government and obviously there are conflict of interest issues that arise with that. So moving on away from the EIDL, which is SBA direct, we move into a program that is SBA normal lending, if you will. SBA's normal manner of lending is through the banking and credit union facilities that are 7A eligible. And the very popular program right now is the PPP, or Paycheck Protection Program. Again, the eligibility is very wide-ranging. All businesses, nonprofits, veteran organizations, tribal business concern, sole proprietors, self-employed individuals, and independent contractors, all within with 500 or fewer employees. So there are some interesting things in the Paycheck Protection Program. First of all, the qualification standards are quite different than the EIDL. And so this is payroll-based, and your average monthly payroll over an annualized figure times 2.5 is the loan amount that you're eligible for. The loan is used for payroll and benefits, but it also can be used on mortgage, rent, and utilities if the expenses were in effect and before the 15th of February this year. And so another feature of this program is it has a different start date than the EIDL. This is very interesting also because if you are allowed to, or if you are awarded through the banks or credit union lending institutions, then, and if it's combined with any unemployment features, should that be eligible, or any other abatements on mortgage and rent or utilities that you can negotiate, then it could be a very powerful program for you. The payments are deferred for 6 months. Interest rate is 1%. It's a term of 2 years, so it's a short term. However, there's so much, as long as it's used for these particular items, then it is forgivable. Borrowers can be forgiven on up to 8 weeks of eligible expenses from the date of the loan. So again, here, those are the eligible expenses: payroll, mortgage, rent, utilities. So roughly 75% of the program is expected to be payroll related. If you have problems in rehiring employees and you're only able to recapture a portion of your workforce, then there will be a proportioning of the benefit amount that's forgivable based upon your ability on your payroll as it proceeds from this point on of the point of being awarded. So therefore, your head count and payroll levels must be maintained, or there are some percentages that are worked out. Not really penalties, but if you're not using the program by the rules, then they will not forgive that. But you do have a grace period because it really is indeterminate when this current COVID problem will be in effect in terms of shutting down business activity. Application process, again, is through your SBA 7A lenders, and they manage the PPP process. There's a fair amount. If this is a loan, it's a complete loan, and so having your financial records in order, ready to present to the bank, is critical in your ability to have this loan move forward and reviewed by the SBA. The bank won't loan to you if they're not reimbursed by the SBA and have that insurance in hand. So it's important that your documentation be complete, or you won't be assisting the bank in making the case. So what do you need to certify? So you need to certify that it's necessary. And numerous attempts have been made to define that word, and that's very nebulous, very open-ended. I believe it's intentional so that discretion can be used. You do need to maintain payroll or your mortgage, lease, and utility payments. You won't receive another loan under this program, so the same set of expenses cannot be covered by different federal loan programs. You provide documentation of the workers, your payroll. There, you need to provide the basis for the calculation on what you'll be receiving. And documented use of the funds will be required in order for loan forgiveness to happen. And you need to certify that everything you're giving the government is true and accurate. They still take a dim view of inaccurate filings. So is it possible for business to apply for both the EIDL and the PPP loan? The answer is yes, except that you can't claim the same expenses as we mentioned. And the EIDL, again, is through the SBA's online portal, and the PPP is through the SBA 7A lenders. Different terms, calculating the benefits and options for each, so that if you have multiple awards, you have the ability to decide how you're going to accept the money. By virtue of receiving an award notice, that does not obligate you to take the money. You only are obligated to make repayment or conform to program rules for forgiveness once you sign the documents. So our guidance on loans in preparation: understand the eligibility terms and programs and the intent of each program. Have your financial statements, information, your narrative, your verbal description ready when you're asked. Applying for the loans doesn't obligate you, as I mentioned. Read the terms, know what you're signing. And funding is extremely limited. And so this is being modified as we speak. There is an effort going into providing another $250 billion to provide into the PPP program. So we can all watch that play out in primetime news. I believe that that is meant as a signal that the system will be reinforced with the amount of money that's needed in order to assure that those that are using the system and applying are going to be listened to, heard, and supported. And so there was question last week about whether when money ran out, what would happen? Our answer is that more money will be provided, it looks like. So there should be some reassurance at that point, and in all of our minds, that we're being listened to, and that this COVID epidemic is being taken seriously by our government. So small business debt relief program, existing 7A loans, there is debt relief automatically provided, 6-month debt relief. During this 6-month period, the SBA will take care of the payments. That includes recent loans that have not aged much at all. There are still some details that are being worked out, as these programs are huge, they're complex. There are many of them that are being rolled out simultaneously, and portals are being built. It's an incredible amount of work, and so rulemaking is still taking place. And for existing disaster loans, if you received any kind of a disaster loan from for the smoke closures this last couple of years, when those were published and the ability to apply for them was open, then those are an automatic deferment. So onto a completely different subject, the employee retention tax credit. This is a tax credit. It's a completely different thing than a loan. And it's for businesses that are partially or fully or partially suspended due to a government order. So let's look at Oregon restaurants as the example. They were closed, as many other businesses were. The qualifying feature is that your business has had a substantial reduction in gross receipts. So closure is a substantial reduction. Even a loss of 50% of gross receipts, as you climb out, you still have to recover to 80% of what norm is before the tax credit relief ends. One of the features of this is that you can't receive a tax credit for employees' retention and the Paycheck Protection Program for free money for those employees. And so it's one or the other in this case. I should state also that the forgivable loans are one or the other also. The ERTC, it's a refundable tax credit up to 10,000 wages per employee. So there's a metric there that you can calculate the benefit to you. And the CARES Act also created an advance option for this credit. And so you use Federal Form 7200 and to file your request for the ERTC. And more information is provided at the link. And with that, well, thank you for attending this webinar. That's all of the formal presentation that we do have. We'll be taking questions here. In the meantime, as Tyler prepares Your next steps are to file an application with the Small Business Administration for the EIDL. File your applications with the SBA 7A lenders and put your options on the table. Sign up for our business trainings. You're on our newsletter list and can opt out if you wish. But if not, you'll be informed as for the ongoing trainings that we do and our ability to advise you in private on one-on-one basis. And we'll be sending a survey out to you. Again, this is information that you can access over the web for our network, which includes extensive information on the COVID response and a list of tools. The senators' websites in Oregon are extremely robust also. SOU, our own personal website here for the Small Business Development Center, and how to contact us. So with that, thank you for attending today's webinar, and I'll turn this over to Tyler.
Thanks, Marshall. So it may be best, since we have a lot of people still on the call, to go ahead and ask the questions in the chat session, and then I'll do my best to answer them verbally. That worked well in our last webinar, so I would suggest we do the same here. And I know that Scott had just asked a question. I wasn't certain which program, Scott, you were referring to, the EIDL or the PPP, so I kind of answered more generally. But what I can say is that under these programs, the valid expenses are the business expenses, so they don't count personal expenses. So I'm not sure if you were distinguishing between those, but they do need to be valid business expenses for them to be eligible for the loan amounts that people are applying for.
Hi, Tyler. Can you hear me okay?
I can.
Good. Yeah, that's what I was trying to figure out were what were valid business expenses, because it is a business I run out of my home. So although I go out and I do trade shows, so I have expenses on the road too, but those are all canceled now. So just trying to figure out, you know, since it's a home-based business, does the mortgage count or do any of the utilities count? And I have applied for the EIDL, and I'm still waiting for my bank to be able to accept the PPP application. So I'm trying to get both on the table.
Yeah, so really it comes down to, when you file your taxes, what are you counting as valid business expenses? That represents the pool of expenses that are typically eligible under the programs. Each program has slight variances on what is and isn't allowable. So what I would suggest is you take a look at what the acceptable expenses are when you are trying to estimate what that amount would be. So I'm hoping that answers that question. Okay, Angelica asked a question. She said, I understand agriculture was added to the CARES Act last week. So there is a separate section under the CARES Act for aid for agriculture firms. However, my understanding is they are still working out the details of implementation, and that'll fall under the USDA part of financing. So we don't have any information on that yet. We're still waiting for that. Hopefully it'll be available in a couple of weeks. Okay, I'm just trying to see where the questions are here. There's a comment from Christy Kiltz. Says part of my team are independent contractors. Okay, I don't know what the question is on Christy, so I'm going to skip to the next one here. Okay, so Holly has a question about should she reapply or call. She applied on March 30th. So what I would say, Holly, for you, if when you applied, if that included the option to be applying for the up to $10,000 grant, if that came up during your process, if you remember that, you shouldn't reapply. You should call and check on that using the phone number that Marshall gave earlier. There will be a fairly long wait time because the SBA team is very backed up, but that's what I would do if you saw that grant pop up during that application. If you didn't see that, that means you applied under the old platform, and you should reapply if that's the case. Okay, Kareen asks about fishing businesses. So my understanding is aquaculture is allowable, so that's not considered agriculture under the rules. So as far as I know, as long as it's a legal business and meets the other eligibility requirements that Marshall shared, you should be able to apply for the PPP. Okay, so Christy is saying, specific to her comment, she's saying, can either EIDL or PPP be applied to independent contractors I need to keep paying? Okay, so PPP covers payroll, and independent contractors are not on payroll, so they are not considered eligible expenses because they actually are their own companies and they can apply for EIDL or PPP. So the answer really for PPP is not for that. For EIDL, it gets a little trickier that they have a more open definition of what could be eligible, but how much they will actually offer for the loan amount is dependent on their assessment of your application, your ability to service the loan, your credit score, et cetera. So that one's harder for me to answer. They could be expenses that you could get a loan for under EIDL, but how much you get, that's going to depend on what they assess in the process. And Sandy is asking a similar question, how are 1099 employees handled? That's the same thing as an independent contractor. So under PPP, 1099 employees aren't employees, actually, they're workers, and they are like their own separate companies that can separately apply for aid through the EIDL or PPP process. Okay, and the question is, Sandy also has a question, do they look at all of last year to underrate or only the last quarter? So they look at the full year for employee wages, not contractor wages. So they look at the full year of salary, and that they take the amount that a business is eligible to apply for is 2.5 times the monthly salary of the prior, basically 12 months of wages. Okay. Yeah, so Corrine, as far as I know, ocean fishing, I don't think that's an exclusion as far as I know on the PPP. Okay, Sandy's also asking about debt relief. So debt relief applies to existing SBA 7 loans, not new ones. Let's see, Robert is asking a question, can landlords of businesses get a loan for rent relief? So I don't think so, because rent relief is not an expense. So think about these programs, what they are doing is covering business expenses, some of them with a focus on payroll, like the payment protection plan. So as far as I know, rent relief is not a business expense. That's just money you decide not to take from tenants. Okay, Tanya asked a good question. She says, for a business owner, what would be considered as wages under PPP? So more specifically, the question is, what counts as payroll under PPP? So that's the way to think about that is for your standard payroll. So if you do pay W-2 wages to employees and their benefits, that counts. If you are a sole proprietor, let's say you have no employees, the net income that you claim on your Schedule C, that can be considered, quote, payroll costs under PPP, but not necessarily under EIDL. So there is a distinction there. Hopefully that was able to clarify. So Holly's asking a clarifying question. Winery subject to USDA jurisdiction. I don't know the answer to that. That gets very specific. So if you're thinking about applying for PPP, that's probably something you would want to highlight with your bank lender that you're working with and see if that's a disqualifier. They'll have the more specific rules on what can and can't apply for the PPP program. So Sandy is asking, are they only using 2018 tax returns for eligibility or 2019? So what I would say is actually current is better. I don't even know if they're looking at 2018 returns. I think they're looking at 2019 returns, and in lieu of a 2019 return, probably like a certified pro forma of 2019. So I don't think they're looking at 2018 at all, as far as I know. Not in terms of calculating loan amounts anyway.
So Tyler, may I make a comment here?
Yeah, please.
That we're hearing from different banks, there are different levels of difficulty different banks are having with being able to connect in with the SBA. We've heard that Wells Fargo has placed a temporary cap on accepting new loans. And that may be a temporary thing, that may not be. But so there are varying degrees of acceptance by banks and ability to move things forward in an expedited manner. And so best advice that we have is for you to go to your lending institution that you have your relationship with and start there. And if that doesn't handle your needs, then at that point, you have the ability to start shopping. And I know that based upon just an interview or two that many of the banks are working 24/7 trying to get applications up the line to the SBA so that the reimbursement comes to the bank to be able to pay. And so that last comment was directed specifically at the PPP program.
Okay, still some questions coming in.
So Robert has one that he just brought in.
Yeah, so Robert is saying, is the loss of rental income from a small business due to their closing or inability to pay rent make the landlord eligible? Yeah, so I mean, any part of these programs, a general certification that a business owner will have to make is that their business is negatively impacted by the COVID-19 outbreak event, right? So that is a general qualifier for these programs. If your business is not impacted by COVID-19, then you aren't eligible to apply for the COVID-19 related aid. So yeah, that is a minimum requirement, is that you're impacted. In terms of what you can get a loan for and how much forgiveness you may get for that loan, those are based on the elements that Marshall shared earlier in terms of what can qualify you for the loan. For example, under the Payment Protection Program, you can qualify up to 2.5 months of your annual payroll, right? So I'm not sure if that answers your specific question, but that's what it is. So Robert, that's what you're saying. How much can you apply for? For the PPP, that's what it is, 2.5 months of your annual payroll. For EIDL, it's going to be different. It's going to be based on, basically you will fill out the forms and they will do an assessment based on your credit record, your business health, et cetera. That's how they will determine, and your ability to service a payment, that's how they will determine what the loan amount is. Okay, Betty had a question under basically record keeping for the Payment Protection Program. How will I prove the loan is being used for payroll? So if you are doing your quarterly IRS filings, which I think is Form 941, if I'm not mistaken, that will pretty much show how much you're paying for payroll. So I would default to the tax forms that you file should show evidence, among other things, that are your record keeping. Scott is asking a question, does the payday the sole proprietor gives himself qualify as payroll? Yeah, so this depends on which program. So under PPP, payroll expenses are what I talked about earlier. It's what is your formal payroll, which are your wages, or for somebody that is a sole proprietor, say without employees as an example, their Schedule C will show what their net income is for the year. That is basically your annualized payroll expense amount for a sole proprietor. So hopefully that helps answer that one for Scott. All right, let's see, Corrine is asking for a landlord if the tenant loses their job. Yeah, so I think the answer is correct, that EIDL will cover business expenses for eligible businesses that have been impacted by COVID-19. So based on what you're describing, Corrine, yes. That scenario sounds like a business that could be eligible for EIDL. And Tiffany is saying, just to clarify, she's already applied for PPP, isn't sure it's the right loan for her. I can now apply for EIDL and not, yes. So short answer to you, Tiffany, is yes. You can apply for the EIDL and not accept the PPP if it is approved. Yes, you can do that. And Marshall makes a good point, just to clarify, these are non-standard definitions for payroll. Typically, payroll does mean basically W-2 agents. This is not a normal program under PPP. It's an exception to the rule of lending, if you will, for what counts as payroll.
Tyler, I'm on phone, but not on, I can't chat. Can I ask you a question?
Sure.
Can you possibly, the one thing I can't quite comprehend fully is the EIDL and the PPE. I understand the PPP is, driven toward payroll, but under the EIDL, can you possibly make it more concrete in terms of what might be construed as, toward the advance, the 10,000 advance that you could count in that program, aside from the PPP program?
Yeah, so first let me just start with the intent, right? The intent of EIDL, the EIDL, is to help businesses who have expenses under a disaster condition and to provide a loan to help them cover expenses they can't otherwise avoid. Things like rent and utilities they might still have to pay for, even if they have literally zero or reduced revenues. That's the intent of EIDL. In terms of what are the eligible expenses under EIDL, it's fairly broad. Really, what it looks like is what could be eligible is our business expenses. So payroll, rent, utilities, supply chain disruption, other business operating cost obligations. So those are what could be available, but SBA has to make the assessment based on your business to give each business the loan advance amount. And it's up to $10,000, but it doesn't mean it's $10,000. It could be much less, just so that people's expectations are in the right place. Okay, Laureen is saying, I'm assuming that officer wages under an S-Corp are included in payroll expenses for PPP. Yes, that makes sense. They're a W-2 employee in the eyes of the government, and so those would be considered payroll expenses under PPP. Yes, that's my understanding, correct. All right, I feel good that we're able to keep up with the questions here, so that's good. Okay, Laureen asked a good question. If one received the PPP and used it for the 8-week period, but then needed more loans, could you then use the EIDL? So there are some intricacies there with how the two loan programs interact. So a general rule across these programs overall is you can't use the same dollar of aid for, or you can't use different dollars of aid for the same dollar of expenses. So you wouldn't be able to use the PPP and the EIDL to both pay for payroll expenses. They would have to be clean and separate from the two. And in some ways, some businesses will basically be told, if you have an EIDL already, you'll have to roll that into the PPP so that you have one obligation to the government as opposed to two separate ones. That being said, if the expenses are separate and discrete and not used for the same dollar of relief, so let's say you use PPP for payroll, but you use EIDL for rent as an example, that could be allowable. So you can actually have both. Okay, Bob is saying all of the lenders in Southern Oregon are not taking new applications. Any suggestions? So there, my advice would be to keep trying and to keep on top of who may be available. Very clearly, this was a huge influx of demand and not enough supply to meet that demand based on the new legislation. As Marshall said earlier, all the bankers are working 24/7 right now. So it's just a matter of processing through those applications. So be persistent, but also be a little bit patient as well. Yeah, Lorene, I don't really have an answer for you on that one. You're saying if they're used for different periods of time. I'm not sure on that one. I mean, the other consideration is we may have very different legislation at the end of May. There may be a new round of legislation depending on what happens with the outbreak. So there's a few wild cards in that. The other consideration is that there is some risk at some point that these programs will hit their ceiling in terms of total funding too. Okay, it looks like Eric provided a link that may have some options for lenders. So Victoria, I'm not really sure I'm familiar with that question. I don't remember seeing that. So I don't really have an answer for you. I can guess at the answer, but I'm not sure of the specifics. They might be saying who do they work with? Like who's the point of contact to talk about the impact of your business, to impact to your business? In which case, if you're the person filing, it might be you. But I don't know that. I'm guessing a little bit on that one. And I know that Marshall mentioned this in the presentation, but it probably is a good thing to emphasize. It's super important because there is so much demand and not enough supply that you get your financial statements and records in order so that when you are in touch with the lending group, whether it's EIDL with the SBA or the lender for the PPP, that you have your materials ready and don't have to go hunting for it or calculate it. So it's worthwhile to get your financial records ready so you can supply that information to the underwriters for the loan, whether it be SBA or your bank. All right, seems like we're reaching the end of the questions. I'm not seeing a lot more coming through now. Marshall, did you have any other comments to share?
No, I don't. It from here, just to reiterate what Tyler has said, is that invariably rules will change. Any new money coming out potentially may not be an addition. It may be a new set of rules. And so I think that it's important to know that money apparently is going to be there, and there may be a whole series before it's over. So as programs and time goes on, if we are not able to reopen in a timely manner, then invariably rules will have to change to support the conditions at that time. So there is a strategy, as Tyler has mentioned, to look at how these programs combine, how they combine with other sources of revenue or savings or loans that you're able to receive, and that a lot of customized solutions and creative ways to use money are going to be coming out of this. Okay, well, not hearing any more questions, we will call a close to this webinar. Be sure and get in touch with us with any further needs that you may have. Thank you all for participating today.